All right. Good morning, everybody. How are you doing this morning? Welcome to Coffee with Markus. And yes, you might have noticed, so we did change the link for the webinar. So fantastic. Good to see you here. So let's see who here wants to make money with trading. Come on, type in a yes in the chat box. Oh, yeah. And who wants to make so much money with trading that you can quit your job? Oh, yeah, right? Because that's what happened to me. I was stuck in my job. But let's see who here wants to make money with trading, so much money with trading that you can travel the world and live the lifestyle you always dreamed about. Exactly. That's what we want to do. All right, cool. So here's what we're going to do this morning. This morning, actually, I am in a different webinar because I'm trading live with my mastermind students. So once a month, we are trading live together for 2 hours. But I wanted to pop over here to spend some time with you. And this morning, we're going to talk about the markets real quick. And then I want to talk to you about the importance of having a trading plan. This is extremely important. And in a moment, you will see why. But first of all, let's take a look at the market. So yesterday, we had this massive run up in the markets after Hurricane Irma. Did do some damage, of course, 4 million people without power, but not as much as expected. So this is where traders said, yay, it looks good. We dodged a bullet. Well, I don't know if the people who are without power in Florida right now are agreeing, or the houses are flooded and they would not agree that they dodged a bullet. But hey, this is what traders thought yesterday. Also, that there were no news from North Korea, and right now, no news is good news. So this morning, the major indices are still up, making new record highs here in the E-mini S&P, in the Nasdaq, approaching the 6,000 level, actually trading above 6,000 here this morning, and also the Dow trading above 22,000. Now, as the stock markets are going up, gold in the lower middle is moving down, so we're down like 0.4%. Same are bonds this morning here, moving slightly lower. Crude oil a little bit all over the place, again trading at the 48 level, and we talked about this several times. Let me bring up crude oil here really quick. So crude oil, as you know, nope, that's not the one that I wanted to bring up. CL1067, that's the one that I wanted to bring up. So we talked about it a few times that crude oil seems to be stuck here between the 50 level and the 48 level, right? And so this is what this morning we're seeing again, that we are right dead smack in between here. And we moved as low as 46 at some point. This is when Hurricane Harvey hit, and right now we are trading around the 48 level again. All right, so that's what's going on here in the markets. Now, I want to talk to you about something very important, and this is the importance of a trading plan. Now, first of all, brief recap. We talked about trading plans in the past, and so the elements of a trading plan is first that you're saying what markets are you trading. Okay, so this means it could be stocks, options. Okay, so you be very specific. What are you trading? If it is the currency markets, you specify them here. If it is the futures markets, you specify with futures markets. Okay, secondly, you specify what trading strategies, if you have multiple strategies, are you trading. Okay, you specify this here. Now you also, as a third element, say exactly what are the entry, so basically the rules of the strategies, which is always the entry. For me, it is always the stop loss, and it is also the profit target. So these are the things that I want to know. When do I enter? When do I exit? Okay. So fourth is any other rules. Now, what could be other rules is, for example, when I'm day trading, okay, don't trade 5 minutes before and after a major economic report. Okay? So this is, for example, a rule. As you know, another rule that I have is do not trade on abbreviated trading hours. Okay, so for example, the day after Thanksgiving, or the day after Labor Day, right? The day after Independence Day. Do not trade the day before and or after, depending how you want to specify, a major holiday, because trading might be erratic. Okay. So plus, you also want to include your money management rules, and money management rules means how much are you going to risk? And it also means how much are you going to risk? So it also answers the question about the position size. What's the position size that you're trading? So why is this important? Why is this important to have a written plan that is crystal clear and tells you exactly what to do? Well, here's why. It tells you what to do in the heat of the moment. You see, when the markets are moving quickly, then you might second guess yourself and you might say, oh my gosh, what do I do now? Okay, this eliminates the guesswork. Okay, that you're not sitting there in the morning and say, what should I do here this morning? That you say very clearly, here's what I'm going to do. I'm going to trade between these hours. Here are the rules. Here is how I place the trades. Here is what exactly I'm doing. So secondly, it should take out emotions. Now, why is that so important? You see, when we have winning trades, that's always easy, right? I mean, winning trades, hooray. We make good money and we're happy, but we will have losing trades as well. Now, as we have losing trades, it is important that we keep our cool and keep following our plan, because we will have, newsflash, we will have losing trades. Okay. So the biggest problem that I see with traders is that they do not follow the plan. Okay, this is a mistake, by the way. This is what I want to say. So the mistake here is if you stop following your plan after losing trade, do not follow the plan after a losing trade. Why? Because then we always say, oh my gosh, we should have done this, or if I only would do this, if I only used a larger stop loss, if I only used a smaller profit target, if only I had a different criteria. And very often, okay, this is another mistake that I see. Traders are throwing out the baby with the bathwater. Okay, don't judge a strategy after a couple of losing trades. Losses are part of our business as traders. Okay, in order to judge a strategy, you need at least 40 trades before you have statistically significant results. Can't judge anything. There we go, at least 40 trades. Now, if you don't follow your plan, you never have a chance to make back the money that you might have potentially lost, right? Because again, losses are part of the business. So you also want to make sure that your results, this is why it is important to have a written plan and following. Your results are, how do you say it, replicatable, duplicatable. Your results are predictable. Because when you do something good and you have it written in your plan, then you know what you need to keep doing, right? So this is where it's so important. If you don't have a plan, let's say right now you have a winning streak. So you have a few trades that are doing great. But if you don't have a plan, you don't know why that is. And if you have a couple of losing trades and you don't have a plan, you don't know why that is. So if you just trade with a gut feeling, right, you cannot duplicate the results. So your results are predictable, and I hope that this word, duplicatable. Okay, so that's the word that I'm looking for, that you can repeat what works for you. Okay, so this is why it is so important to have a trading plan. Now, let me ask you, for those of you who are here in Coffee with Marcus with me live, who has a written trading plan that has these elements that tell you exactly what to do? And more importantly, this trading plan, if you would hand it to me, would I get the same results? Would I place the exact same trades? Do you have a plan like this? Yes or no? Just type it in questions, whether you say yes or no. Okay, there's a couple of yeses. There's more no's. Okay, there's more no's. Okay, this is what you need to do before you place any trades. This is extremely important. This is one of the cornerstones. It's like running a business without a business plan. It's like building a house without a blueprint. I mean, yes, will you succeed to run a business without a plan? Maybe. Will you be as successful as if you had a plan? No. Can you build a house without a blueprint? Maybe. Will it be a more beautiful house and a more structurally stable house with a blueprint? Absolutely. Okay. So this is why you need to make sure that you first of all have a plan and then also follow the plan. Okay. So this is what I wanted to share with you this morning. And now I'm going to head over to my mastermind students here, my inner circle, and trade a little bit more live with them. So this morning, we placed already a few trades and it's looking good. So we are up for this morning already. And we started trading a little bit more than half an hour ago. So this is what I do in my inner circle and mastermind. Once a month, we trade together for 2 hours. So I have another hour and a half to go here, and I want to do this. All right, anyhow, I hope that helps. And let's see. For those of you live here in the room, I'll stick around for a couple of more minutes and answer a few questions. For those of you watching the recording, you know what? I leave the recording on here. Let's just answer a couple of more questions to make sure, since you're showing up here. Okay, Thomas, hey, if you could just touch on the profit differences between trading the stock or stock option. Thomas, I saw that question, and this is something that I want to do tomorrow because it is important that you understand the difference between stocks and options, especially when you are creating a plan like this. When you have at the first element where you say, what markets should you be trading? Is it stocks, options, or futures, right? So tomorrow I'll dedicate the whole session to it, Thomas, and this is what we're going to do and say, all right, here are the differences between stocks and options, pros and cons. How does that sound? Is that okay? All right, I wrote this down. That's what we're going to do tomorrow. Okay, Kevin says, putting my plan together now. Okay, great. So I will follow the plan. Okay, David says, do you have any preference regarding stocks versus options using PowerX? David, this is the same question that Thomas had, okay? So we're going to cover that tomorrow in Coffee with Marcus. We'll talk exactly when should you be trading stocks, when should you be trading options, okay? And the pros and cons and difference between them so that you can choose what exactly you want to do. All right. So Kevin is asking, do you place binary trades during the evening in the futures if the futures are above the trigger? Kevin, no, you don't do this. So when you are using our binary options table, you see exactly the trading times in the table that tells you when you should be placing these trades. Okay, so we do it during the regular market open. and it depends on the market of when that is. For the E-minis, for example, so if you're looking at E-mini S&P, the Dow, and the Nasdaq, this is when we are trading between 8:30 Central Time and 3 o'clock. For gold and silver, it is between 7:30 and 1, and for crude oil, it's between 7:30 and I believe it's 2 o'clock. Okay, so but it says it exactly there in the binary options table. All right, fantastic. Well, I'm going to go back to hanging out with my mastermind students right now. Mark is trading along with them, and we're making some nice profits there. So tomorrow I'll be back here because then we talk about trading stocks versus trading options and what exactly might be the best for you, whether you should trade stocks or options. All right, you have a fantastic day, and I'll see you tomorrow morning. Thanks and bye-bye.